Hello friends from Promotion Stock Secrets. This is UCSGS. I'm recording my first video on the RSI 1-year breakout strategy. Um, Before we get into the strategy, let me just point you this out. I think it's a very important point that I have to tell you. This strategy is really a highly profitable strategy if you play it right. If you don't play it right, you're going to lose a lot of money, a lot of money. Because any strategy that comes with a highly profitability is also going to have its own risk. So I hope you guys understand that. So using stop loss is very critical and essential. And I'll be going through details on how to skin out your risk and how to put your stop loss, where to exactly put your stop loss, and then I'll be going over how to buy the breakouts and how to buy the pullbacks on these using just the same strategy. Currently I'm using TradingView to show you because I tried it with the stock charts. It was not easy to show, or it was not easy to use, so I'm using TradingView to show you those stocks, but all my screeners and scanners are designed in stock charts. So let's take a look at CSIQ. I think I have alerted this stock when it was trading around $10. Yeah, when it was trading around $10, I alerted this in promotion stock secret right around this area. The reason was because it was a bullish breakout, and let's take a look at this. And it was trading below the 50 SMA, but well above the 100 SMA, and there was a lot of things that was going on with the stock, so I alerted it right around $10 and for a quick swing trade. And also notice that stochastic pulled back on a bullish note, which is again a buying signal. When a stock is bullish and stochastic is pulling back as a buying signal, provided that you have to have a few more confirmations. But let's just get to the chart itself. What the strategy is actually going to measure is RSI breakout. Well, RSI breakout means it's actually telling us that there are new buyers showing up in the market. It could be just a second, where is RSI? It is showing us there are new buyers in the market. Basically, what we are looking for is a 1-year breakout. Oops, vertical lines. What we are looking for is a 52-week breakout. So in this case, RSI breakout was right around here. So that was 12, approximately right around this area. Now, if you notice the RSI breakout level right from that, it is somewhere right there. Those are some noisy lines. It's right around this area. That's where the breakout really happened, and it was a good trade until then. If you actually just zoom in and look at just particularly those weeks, how I would have traded this stock. That's what I'm trying to cover here. Basically, the breakout happened right there. Sorry. First thing I would have looked at is on daily chart. On daily chart, I would have looked for a close above $3. So basically, what we are looking for is on the daily chart. Where is it? I would have looked for, after a week, I would have looked for a close above that $3. So closed. It was all the weekly closing high, or highest weekly close. That's the right word. Highest weekly close. Above a highest weekly close, if the stock breaks out again, it's a buy. And it just rallied all the way up. So you can advance your stop loss after this. You can advance your stop loss from here to that. That was a good resistance support point. It was a resistance, now it is support. And then we can advance your stop loss right there. When you see this big of a candle, and if this candle is almost like 10% on its gain, use Fibonacci retracement to put your next. So, oh my goodness. Yeah, use Fibonacci retracement and keep your stop loss to 50%. Typically, stock would retrace to 50%, and any retracement below that could get support at either 23.6% or 38.2%. Mostly 50% is what I go with. And now you have to start watching the stock on weekly for a second breakout play. So second breakout happened right around this area, right on this candlestick. Now again buying over the weekly candle is $6.6. Buy in, sell. You can swing trade the stock from there. Or if you're looking for an investment kind of opportunity where you have a lot of money to invest, you can just start drawing up trend of on RSI. As long as RSI, as long as this trend line is being supported on the RSI, you can stay in the stock. You don't have to really worry about this 90. You can just stay in the stock as long as the RSI support. When the RSI support is broken down, that indicates the critical point where you have to exit. In this case, it actually broke out again, which is very rare to happen. Uh, for example, Tesla. So in this case, you could have seen what would have happened if you don't obey with the RSI rule. You could have got into a huge loss in this case. Well, you could have lost a lot of gain in this case. Not a loss basically, but you could have lost a lot of gain. Also notice the RSI breakout on this one, right around this area, which on the vertical, which on the price chart is right around, right around there. And a second breakout happened right there. Second breakout happened right there. And draw a vertical line, horizontal line. And any close above that is a buy. That's it. It's simple to use the strategy. And now the chart list that I'm going to post in my blog spot will have a lot more charts than few stocks, but you have to pick the right stocks based on the few criteria that I'm going to show you guys. So first thing that I want to show you is first criteria that you have to notice is this: ignore any breakouts below RSI 14 weekly 50s. If there is RSI breakout that's happening below 50, ignore it. It is not worth watching that stock breaking out. Ignore it. It is not worth. Second, ignore any breakouts that does not hold its gain on a weekly chart. What I mean by that is, if I don't think so, I have any examples at this point of time. Um, okay, I can show you what all kind of stock, charts you don't, or candlesticks you don't want to see. Basically, you don't want to see a candlestick like this Let me try to indicate with yeah, basically you don't want to see a candlestick like that. Like this one basically, and you don't want to see a candlestick like this. Do I have this? Yeah. Basically you don't want to see a candlestick like that, or mostly like inverted hammers and bearish engulfing candles. You don't want to see all this kind of um, bearish reversal candles. Basically, that's what I'm getting to. You don't want to see any of those candles. That just indicates that the sellers are taking over, and I wouldn't go long if I see such kind of candles, unless it proves me otherwise. Like, yeah, I think I got a start to show you for that. See, this one was an RSI breakout, and right here, it did not hold its gain. But then when the second breakout happened, I knew this is going to be good. That's why I had it on my blog spot. I added this chart on my blog spot, and it's not holding gain still. That's just not a good sign, in my opinion. Okay, now the third rule is you have to make sure that there is an uptrend on weekly chart prior to the breakout. I think I have an example to show you just exactly that. Yeah, first RSI breakout right here. In this case, there was no uptrend. I'll get to that later. But then you have a second RSI breakout here. Oops. You had a second RSI breakout right there. On that candle. In this case, you had a nice uptrend. That's what I mean. You have to find this uptrend prior to the breakout. You need to have this uptrend to confirm that the stock is going to break out. Okay, if you don't find this uptrend, what you need to look for is 50, 50 SMA and 200 SMA on daily chart, trading closer to each other. Well, I'm still working on fine-tuning this on my scan, so you'll have to you'll have to go through every single stock that appears on the chart list to actually filter it based on this criteria. What I mean is, let me just quickly show you that on the daily chart. Let me remove all these things. We don't need it now. Okay, let's just list this as well. Add two more indicators here. And let me just add MACD. So that's something that I want to show on MACD. Yeah. $50 and 200 to differentiate the colors. Okay. Prior to this breakout, you can see that the 50 and 200 SMA are fairly close. Not that close, but it's fairly close. But how can you really know that it is really close or not? You can use MACD for that. You can just throw in 50 and 200